Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Graeme O'Neill, President and CEO of BayHorseSilver.com. Welcome to the show, Graeme.
Well, thanks. It's a pleasure to be here.
Graeme, we had a town hall meeting in Vancouver 2 weeks ago to discuss the very real possibility that the exchange could disappear because of overregulation and being too costly for investors to use or for companies to use to raise funds. What was your impression of the meeting where 400 people showed up, but nobody from the major media?
Well, I was disappointed that the major media wasn't there. I mean, this is a serious issue in my estimation. Now, as the president and CEO of a public company, my job is to look after the shareholders, and it's to make sure that I create value for them. And when I see inequities happen, as I see every single day in my market, I have to speak out. So I think what has happened is the venture exchange is opened a Pandora's box. And, the cat is out of the bag now, and they're not going to be able to put it back in very easily. There's a lot of issues that have to be addressed, and either through the exchange or with the exchange making representation to the regulators to clear some issues up. So I think it's a significant problem, and it's far greater than actually most probably realize.
What kind of risk is there to the Canadian economy if the venture exchange collapses due to overregulation and charging its customers too much?
Well, it's not just overregulation and charging customers too much. There's so many abuses happening, but the cost of the economy is going to be huge. I don't know how much money has been raised over the last 10 years by the juniors, but it all goes into the economy. And the exchange pointed out that they have stakeholders. Well, actually, they don't have stakeholders so much as they have dependents. So except for the companies and the shareholders and the money-raising side, they're the stakeholders. All the rest are dependents. They're dependent upon us to provide jobs, to provide growing businesses, and to provide taxable revenue that will grow the economy. And that's going to be a significant chunk that goes out the window if this is allowed to proceed the way it has.
What was the mood at the meeting, and what was the mood after the meeting?
Well, it was both angry and frustrated. Gentleman beside me, he commented, this is just like rearranging the chairs on the deck of the Titanic. And that was funny he said that because I had written that in my letter to the exchange. And others had commented it was just putting lipstick on a pig. I think the exchange is going the right way, and they're taking it seriously, but the measures they propose are not going far enough because it's not comprehensive enough, and it's not addressing the issues that are directly affecting the exchange participants and essentially taking money out of shareholders and investors' pockets.
Graeme, one of the things that really impressed me and shocked me at the same time was that the current rules and regulations on the venture exchange exclude 97% of Canadians from investing in it. Can you maybe explain how that happened and why?
Well, that comes down to the know your client and to the appropriateness of the investment. I believe it's at 65 years. If you have a brokerage account, you are deemed to be not worthy of participating in the public markets, especially the junior markets, because it's too risky for you. It's not appropriate. Now, you look at, or I look at the markets today, and actually I see it as a gamble now. It used to be speculate to accumulate, and you take your acknowledged risks, and you go out there and you take your risk money, and you're prepared to lose it. But at the same time, there are people who are working actively and very strenuously, in fact, to help make your dream, your speculation become a reality. But the way I see the markets today with computerized trading, I see it as a gamble. There's people just running out there, day trading. There's manipulative practice happening that, albeit do not meet the definition of a manipulative practice. And maybe that's what IROC is trying to prevent, is because no one in their right mind would go into a manipulated market. And I think that there's so much manipulation, so much abuse happening that maybe that's why they're doing it. But rather than just stopping the abuse and stopping the manipulation.
Graeme, what do you feel needs to be done to correct the problems on the venture exchange?
Well, that's a significant issue. I look at the big picture on everything. So most of the people at the meeting were talking about shorting's not an issue. This is not an issue. That's not an issue. But what about the zombie companies, et cetera, and so forth? What I saw as the big picture is the so-called zombie companies have been caused by the proliferation of regulations, the abusive practices that have been conducted, in my opinion, on through the exchange. As an example, I've complained many times about what I call the 1,000-share trades. A minimum board lot on the exchange is 1,000 shares. So when we see constantly, and it's not just Bayhorse, it's every single junior company out there, we see these minimum board lot trades, and if you think about the math, you wonder how they can afford to do it. Well, I was advised after the meeting that there were a number of houses reported to me, House 2, House 7 particularly. I've heard of other houses, and what they have is they have trading groups which hold 200 to 300 venture companies on their books. And you multiply that by 2 or 3 or 4 or 5 trading houses or trading groups, and they are looking to pick up half a penny. But that makes significant revenue stream. Now, the exchange has got a 0.003 cent cost for executing a trade. So a 1,000 share trade or a minimum board lot should theoretically cost $3. But I'm advised that these people in these coterie of groups are executing these 1,000 share trades for $1. So that means someone's subsidizing them. Is the exchange saying, well, we'll discount the price for volume? So, but most of those minimum board lot trades are on the sell side. And it provides what I call relentless selling pressure that affects the market psychology. In essence, it's saying to the investor who looks at particularly a particular company and saying, I'd like to invest, and then they see the continual, hold at a specific price. They say, well, they're not going to let the stock price rise, so I'm not going to participate. So, unless you have positive market psychology, things are not going to go anywhere. Now, secondarily, or next, front running. That's a regulatory issue, but I've been advised by numerous brokers. I acted like a lightning rod for a lot of people when I wrote my letter to the exchange, and they were calling me and they were complaining about all kinds of things. So front running is blatantly illegal. It's not permitted. Brokers can lose their licenses, and that was brought up by Dorothy Hoffett at the broker at Wolverton at the meeting, the town hall. But what's happening is that with all the computerized trading, essentially what happens is if a broker puts in a market order, he goes to the back office, it goes in the line, and it goes down the slow boat to China route before it gets to the execution platform. Well, the way it's been explained to me is that as it goes down the line, it passes a switch, it triggers an algorithm, and that algorithm says, oh, this guy's going to sell the stock, let's get in front of him. But the algorithm routes that front run on the fast lane. It goes on the freeway. So it gets to the execution platform before it. Now, we think in terms of seconds. This is multiple fractions of a millisecond, microseconds. It's instantaneous, but it happens. You know, and this is not just Dorothy. This is 2 or 3 or 4 brokers. This is, you know, a person who advised me he executed a trade. There was nothing else happening. He saw the trade go through, and whoops, he was told by his broker that he only got 5,000 shares sold out of 70 out of a market order. So that is abusive, you know, so that's another issue. Then you've got shorting. Now, IROC and the exchange says it's not an issue. There was a study done. It's not an issue. Well, the study was done in 2010, and it was done over a 3-year period. But I question why shorting is permitted at all in the on the venture exchange. Like, the venture exchange is really an incubator. It's to help companies get access to capital to grow and to proceed on to the main exchange, the TSX, where they can generate revenue. But if you put a bunch of psychopaths, and I use that word advisedly, into a kindergarten, you know, it's no wonder that the companies are all in disarray. So this is essentially what's happening by allowing shorting, by allowing these minimum board lot trades, which are trying to take half a penny profit out of the market. You're effectively putting, you know, wolves in with babes. And the companies, the people that provide the money, the investors and the companies and the shareholders, they put their faith in their money on the line that we're going to be able to build companies that will eventually translate over into the TSX. But we're literally torn apart by these nefarious, and I'm going to call a spade, just nefarious and abusive practices. And it may be that with the advent of computerized trading, it's an unintended consequence, but it's happening.
Graeme, do you have any confidence after this meeting that things will be changed quick enough so that the exchange can survive and provide a useful service?
No, I don't. I don't have confidence in it because the exchange is only doing what they can do. They probably haven't even really addressed all the regulatory issues and the abusive practices that are slowly coming to light. And they need the regulators to do that, and regulators are way too slow.
Don't these people realize if the venture exchange dies, their jobs go with it?
Well, you know, the one thing that I've always found with government is that it doesn't matter what happens. You know, they just keep building their empires. You know, I'm a firm believer in Groucho Marx and his aphorisms. You know, he said, who are you going to believe, me or your own eyes? So when the regulators say that there's nothing wrong, we just have to look at the venture index and we can see there's something wrong. We just have to look at our daily trading and we know there's something wrong. So you know, the regulators will not address this because you have the issue of he who has the gold makes the rules. Now, the large financial institutions, they may not make the rules for the exchange, but certainly they influence the politicians who make the rules. And that's you know, a cat that is certainly not going to go away.
Graeme, where should people go if they have some interest in Bay Horse Silver?
Go to bayhorsesilver.com. We were just interviewed by David Morgan of the Silver Report, and you know, he's very excited about our silver projects. But bayhorsesilver.com, you'll get all the information there.
Graeme, thanks for being on This Week in Money.
Okay, thanks very much for having me.
My guest has been Graeme O'Neill, President and CEO of bayhorsesilver.com. And that wraps up our show for this week. This show can be heard online anytime at talkdigitalnetwork.com. You can also check it out on the YouTube channel, Talk Digital Network. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.